Next, let's do the statement of cash flow. So for statement of cash flow with the indirect method, there's going to be operating expenses, investing activities, and financing activities. So it's kind of tough to understand like what is considered to be investing activity and financing activity. But there's some videos I made about that. You guys can watch that if you'd like. For operating activities, let's see. Um, if there is in fact an increase in the accounts receivable, that would be a operating activity. Gain on sale, I believe that as well. Depreciation, gain on sale. For investing activities, it's gonna be things such as if there's like, well, purchase of land. That's going to be one. If there actually was a purchase of land, sale of investments. Let's see. Suppose investments. Oh, plants and plant assets. Financing activity is probably the easiest to understand. Notes payable. There's bond payables. If there are dividend payments, payments of cash dividends. So like the thing is like once you guys are able to categorize what these are, like what operating activities are, what investing activities are, what finance activities are, the next thing to do is using the indirect method. So like if there's an increase in AR, um, so on December 31st, 37,000 cash, accounts receivable 41,000. So like the beginning balance is that, but like the ending balance, or like the next year, pretty much, accounts receivable was 41,600. So there was an increase in AR. So 16,600. But if there was an increase in AR, what that means is like, or like vice versa, like if there was a decrease in AR, it actually means that cash has gone up. Because if AR decreases, then it means that cash has actually gone up. But if it is increased, it means that there's actually negative cash flow when it comes to the increase in accounts receivable using the indirect method. Now, depreciation. So there was 11,000 depreciation. 11,000 depreciation. Gain on sale of investments. Investment portfolio. So there was 34,000 gain. If there was a gain, um, If there was a gain, that means that using the indirect method, because if it's kind of hard to understand. I know. I forgot about gain on sale. But it's like that. Purchase of land. So it's purchased for 13,000 cash. So the cash go down. Sale of investments. So 15,000 was sold. Plants and 80,000. Common stock. It's retirement of payment. No, issuance of common stock. Notes payable. Well, retirement of notes payable. So the issuance of common stock, an additional $20,000 was issued. So if stock was issued, retirement of notes payable. Payments of cash dividends. Okay. If there was a gain on sale, shouldn't it go up? If there was a gain on sale, shouldn't this cash go up or down in there? Oh, okay. So like we have to decrease. We have to subtract that from the net income. Is the reason why there was a gain on it. Um, hmm. Okay. Well, I mean, I'm not really like that knowledgeable about the statement of cash flow, especially the indirect method. But it seems like for example, the gain of sale on investments. Like what that means is that um, pretty much cash has increased, right? Because you made a sale and you get a gain on it. But the thing is, when you use the indirect method, especially for operating expenses, you have to decrease that from the net income. But if you're looking at things, for example, like the investing activities or the financing activities, it's not going to be deducted from the net income, but it's going to just be net cash provided or used by the investing activity. So like because you purchase land, so like cash, so that really is like negative amount. The cash has gone down. Okay. Statement of cash flow and direct method.